Very good evening, friends. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. I'm extremely pleased to share that our all products like Newsdesk, FNO Learnings Academy, and so many things are going good. Video trainings, audio trainings, and everything. If you wish to have a product range, you can definitely WhatsApp at 919899242978 9899242978. We all understand that capital is really scarce in nature. And when I speak about Asia, specifically Southeast Asia, then except Singapore, capital is scarce everywhere. And India is definitely not an exception in that regards. Considering this fact, if you look at COVID-19, then government already borrowed over 12 trillion Indian rupees in the last year, which is about 12 lakh crores. And God knows how much more money government is going to borrow in this budget. I have already made a video and made myself very clear that three things which I am going to be looking in this budget. Number one is definitely the disinvestment target, which is more important. Number two is definitely the fiscal deficit and the respective numbers which the government is going to be putting on the table. And, number three is, in 2020, in fact, in the last several years, private equity player and venture capitalist funds are investing a huge amount of money in the market and specifically in India. There was a time I remember when I started my career in 2007. After 6 7 months, the private equity players used to come, and then people used to be very happy that, oh my God, this private equity player is investing in India, or he's investing in this company, he's investing in this company. So people used to be very happy. But now, almost every second day, the private equity funds are investing in India. And it is very difficult to do the research actually which investment is strategic in nature and which investment is not strategic in nature. That is more important. Like, I will give you some data, and I hope this data will really make you interesting. As per the public information, year 2020, around rupees 26,000 crores worth of IPOs being raised in the Indian capital market. It looks very good that 26,000 crores of IPO means a very good amount. But many people do not know that IPOs are divided into two parts. Number one is the primary offering. Primary offering means that the promoter is diluting his stake and he is investing in the market and basically inviting the fresh investor to come and invest. Number two is secondary offering IPOs. Now, secondary after IPO means that when a private equity player exit, example I will show you in the next chart how exactly it is happening. Now here how it is, like, let me have a simplistic example of a company which is called, I'm taking a hypothetical example. So Ram Lal Samosa Private Limited. Now this is a company who is having around 5,000 crore rupees of sales. So if hypothetically this company exists, it's just a coincidence, to be honest, because I always choose the name which really do not exist. That's how I choose the name. So Ramlal Samosa and Company is actually in the market, but the point is that as far as the promotership is concerned, basically the holding is concerned, the promoters are holding 100% of the shares and public is holding 0% of the shares. Ramlal Samosa and Company wanted to increase in the e-delivery segment like Zomato, Swiggy, and wanted to compete with these players. So they thought we need some money for that. They decided to go ahead with IPO, which is known as initial public offer. And they decided that now the scene would be like that. The promoters would be holding around 75% of the stake. Public would be holding around say 15% of the stake, and rest we will give to banks in the form of pledge and all, which is around 5% of the stake. I'm just taking a hypothetical example. So basically they are inviting public to come. Private equity and venture capitalist is zero, which means that they are not invited in the game. Let me please. Another is secondary offering. Now what is secondary offering is, it is very simple. It means that Ramlal Samosa and Company is having a turnover of 5,000 crores. But the catch is that promoters are holding 55% stake, while the VC and private equity firm who privately invested holding 45% stake. Now, Ramlal Samosa and Company wanted to compete with Swiggy, Zomato, Amazon and all, and they decided to go ahead and they decided that let's go for IPO because the firm are the existing PE player are not ready to fund. Now, how the scene would be in this, promoters would continue to be 55%. They will not dilute their interest. VC and private equity player would be zero. They will sell everything. Now this 55% to be divided in two players. One is the public. Say public will be taking 30% share, and say some institutional investors and all are in a position to take 15%. So total 100%, which means that private equity player quit the market. This is called secondary offering IPO. And you would be surprised to know that out of 26,000 crores, 26,000 crores worth of initial public offering being taken, in 2020, as per the public data, around 53%, 53% is the secondary offering IPOs, which means that the private equity player quitted the market. But the scene is little different now. Here we go. First, check the date. With that is really important. 5th January 2021. Canada Brookfield, and by the way, they are the leading player in the real estate. Canada Brookfield Management Inc., New York-based Blackstone, both reached 20 billion investment milestone in India. Means 2020 into 2040. Both crossed 20 billion worth investment in India, which is 20 plus 20 equals to 40, and this is only two players. Let's note this. Out of 20 billion that Brookfield had invested in India over the past decade, around 7 billion went into the real estate, as the firm placed large bets on acquiring assets of property dealers. Very recently, huge amount of bets being done in the real estate sector. But that doesn't mean that Treasury Consulting is taking a call on that. No way. Private equity players are giving hype. I'm not going to be giving this hype, at least to me. Now, this is very important chart, which we need to link. Just look at the Brookfield, guys. Brookfield total investment is around 20 billion. out of which the Geo deal is around 7.6, which is precisely 35% only in Geo deal. Around 1.9 billion others, 2 billion is the RMS, and rest is, you understand. Now here if you look at the Blackstone is a leading investor in the pyramid class. Prestige Group, the recent deal which they did around 1.5 billion, and this is others. This is what the overall information which we are having. Now what I foresee is that, which is this. But what I foresee is that, which is soon you will see that private equity and VC players would be taking strategic positions in this sector. Which might include the upcoming IPOs in India, which might include the banks in India, which might include the insurance companies in India, and the most important is the unlisted financial sector. Many people feel that 100% of the finance sector in India is listed. No, there is an unlisted financial sector also. What I see that in the next decade, probably another 10 years, the private equity firm would be investing around this much amount of money in the Indian finance sector. And lots depend upon the Joe Biden, how Joe Biden is going to be shaping up. That is really, 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 really very important. Let's move to the next. How we can make a portfolio? Number one, we need to see the top 5 and 6 private equity to venture capitalist players in India. Please be note that not all venture capitalist players are as effective as you are thinking. Number two, and very important, we need to see top 2 or 3 sectors who will get the best momentum now. Example number one I see is definitely the real estate, but I really doubt whether real estate pay to this investment, but I'm not sure. Sure in the sense Indian operators can do. Number two is the finance sector. And number three is the NBFC sector. Number three, we need to link the 5 to top 6 stocks in all segment. Indian operators work very fine. We have recently saw in CNBC. And by the way, CNBC story is just a very small story. We need to see top 5-6 stocks in real estate sector, loved by operators, finance sector, and NBFC sector. Last but not the least, we really need to see how much is the FII holding in that. Let me give you a simplistic example in that regards. And then we wind up the show. In India, when it comes to the foreign capital, it only comes from 2 sources. Many people feel that all 4 are same. I know many people feel that, but they are not. They are regularly investing in the market. How long? We don't know. They are quitting the market. That's a big difference. We really need to see that few companies those who are both And do you know, there are many non-listed companies, those who are having both. They very recently, two non-listed companies, X and Y, said that they would be launching this. In the next decade, next few years, we need to understand the dynamics of this player. We need to understand the dynamics of this one. We need to understand the dynamics of this one. We need to understand the dynamics of this one and this one, and that needs to be in both category. Listed, unlisted. I hope you got to know what I wanted to say. This is Rahul Bagan from Treasury Consulting, and you know my WhatsApp and our back office WhatsApp. But still, if you wanted to have any information about our product, trainings, video trainings, audio trainings, courses, and all, you can WhatsApp on my number, or you can WhatsApp on our back office number. Have a great time ahead.